So a good thing to always think about is retirement. I know the government just announced a couple weeks ago that people will be able to withdraw from their pension funds. And for me, I'm a long way away from retirement. But the word on the street is it's never too late to start, and the earlier the better.
Yeah.
So if I'm looking to do a pension fund, I'm trying to understand exactly what that is. So if I come to you and I say, okay, I'm trying to invest in my pension fund, what does that entail?
Good question. So that actually is relates exactly to what I was discussing earlier with the vehicles.
Yes.
So when we're looking at pension funds, there's three different types essentially. You have a provident fund, pension fund, and a retirement annuity or an RA.
Yes.
For all intents and purposes, they're pretty much the same thing. There's only slight differences. So the differences come in, when can you withdraw the money?
Okay.
Can you withdraw a third or can you withdraw the entire amount? So a pension fund and a provident fund are the exact same thing until you reach the age of 55,
All right.
or the fund's retirement age. And thereafter, in a pension fund, you're seen as having retired. So then you have to, if you want to access it, you would only be able to take a third, and the other 2/3 would have to be invested, and that's where you draw like an income from, like our grandparents called it the pension.
Okay.
But essentially that would be in a living annuity or a life annuity. So I'm throwing a lot of jargon out there, but basically pension fund, provident fund, same thing until 55. Pension fund, I can withdraw a third. Provident fund, I can withdraw the entire amount cash.
Mm-hmm.
And a retirement annuity, I cannot touch it until 55. Then I can draw a third.
Okay.
Now those are three vehicles that we would use for retirement. Now you've got a whole bunch of different vehicles you can use. You can use flexible investment. You can use endowment, a tax-free savings account. Those three that I mentioned now for retirement. And all they basically all different tax vehicles. They all have different tax consequences, different rules, restrictions, stuff like that.
Mm-hmm.
So where I get a lot of people confused is they come and they say, look, I want to invest in Allen Gray, the Allen Gray balanced fund, for example.
Okay.
Now, if I use the Allen Gray balanced fund as an example, I can invest in that in a retirement annuity. I can invest in it in an RA, a flexible investment, an endowment, tax-free. So all these vehicles that I mentioned earlier, they essentially are the wrappers. They wrap a fund up in some kind of tax with some kind of tax consequences.